Good morning and welcome back. Let's take a look at the 1 minute time frame right here for the SPY this morning. So this morning is Friday, June 9, 2023, and now it's 9:27 Eastern Time. So 1 minute, but if we look at the 5 minute time frame, we can see that the buy side liquidity taken. You see it make a in the 1 minute time frame. It also let it know it's make a new high of the week. This is the high of the week so far. So it did check out. Yeah, that's as the high of the week so far. So yesterday we see that it make a new low. We just take the buy side liquidity. So if we take a look at the 4-hour time frame, so we see Monday, Tuesday, and Wednesday. So Wednesday take out the buy sell seller liquidity, and start on Thursday it going up reversal. So in terms of the DR for the week, we can see that Wednesday is the making the low of the week. Okay, let's get started to see. So you see the first candle, it really jumped. Wow, look at that. Let's see what is the high time frame first. What did it go up there? What is the high time frame? What the liquidity pool that it go up there in high time frame? In order to do that, let's take a look at the daily time frame. Wow, you see the 9:30 candle, it all of a sudden it's become a thought up candle, but now down close candle right away. Very interesting. So we see right here, let's turn up the bubble charts. So we see for the daily candle, it open, have a gap right there. Let's see it's gonna continue to go up or it's gonna go down. So we have right there. That our high time frame liquidity right there. That's the buy side liquidity is in August 16, 2022. That is the liquidity that it may go up there. And 31. Okay. So let's see. It's 30, 44. Oh, it's almost there. So let's see what setup we have right here. We see the fair value gap. No, there's no fair value gap yet. Yeah, this is something right here. You can trick this at a, you see, order block, buy side liquidity chicken, but this one is invalid. That bearish order block again. Let's see, and then buy side liquidity taken. So let's see if they're gonna be break the order block, go through here, create fair value gap, come back, retest first so we can entry for short. So let's see how play out. Look at 5-minute time frame. You know what? Under 5-minute time frame, we see something different. We don't see a really big rejection right there, but it's 5 minutes. It's just 4 minutes, so yeah, it makes sense now. Let's see. So this is our order block. You can see that this order block 31. Another order block. Leave it away right away. Leave that order block. And this one, let's see. Remember, we for the ICT concept, we have to pay very close attention to the time. So time and the price, not price and times. And for the time, we have the time of interest rate. For the price, we have so-called point of interest. So those two concepts we need to integrate. So 9:35 now. So 5 minutes, first 5 minutes. How you hit behavior, or play action. How play action play out. So right here is the 9 open at 9. Open at 9:30. It's open at midnight. No, not open at midnight. This is the high and low for hourly. The best scenario that we wanted to go up to 31 something, check out the buy side liquidity that's set on August 16. Then it will pull back, and we can trade on pull back right there. A pull back right there, or a retracement right there. Look at the D1, which is daily time frame right there. You can see that we have up here, the 31, 431 right there, right? Yeah, 431.70. And so far we have the high, we have 430.44, so we need another $1.30 to go up there. But on the Friday, it's gonna make $1.35 to the upside. I don't think so, but let's see how it's play out. So basically we do what? This is a bullish or is it bearish? I think you can trick this a auto block, another block with a proportion block right there, another proportion block right there. Okay. So we don't see any setup right now on the 1 minute time frame. Like look at the wow. Yeah, we're gonna go to 31. Keep going. So if we try to enter a long trade right here, what is our logic? What is our rule? Okay, so we can see that the buy side look really taken. They make another new high. Let's take a look at the smart money diversion just to give us some kind of signal or point of interest. Yeah. So for the smart money right here, smart money diversion, we don't see any diversion right now. They all make new high right now, so we don't have the the setup yet, so just patiently waiting for our setup. Our setup that we look for the fair value gap. We look for first. We look for the liquidity swift or push. It can be buy side liquidity if we want to go short, and sell side liquidity if we want to go long. And then we look for the fair value gap, and then we can entry when they retest the failure gap or the auto block or the breaker. So that's our model right there. Very interesting today. Like early in the week, we are anticipate that the big move going to be made on Thursday and Friday, because next week is the CPI release, and it turned out, it happened as we anticipate. It make a big move yesterday, and now which is Thursday, and today Friday, it make big move again. You see, it make big move right here around for the bottom right here, 955, and now it's continue to rally, moving up. So it's set up for a short. I don't think it's short sweep, but it's just maybe a bull trap right here. So it make 30.99, and the buy side liquidity we have up there is 31.71 something. So it's another 80 cents to go up there, right? Not 80 cents. Let's see if it do that. Yeah, 31 right here, 71, 400, so another 80 cents. Okay, let's look at the weekly. Can give us some idea whether liquidity up there. That's the daily. Yeah, that's the same for weekly. So in order to go down, we strongly believe that they have to go up here and clear or sweep this buy side liquidity. Let's see. Oh, we find out that for the weekly, we see that this is a bearish breaker. What you see right here for the weekly, we identify this a bearish breaker. So the point we have to check a look at the open of the candle for 31.55. That's the open. For 31.55, right? It's a weekly candle. Weekly candle. For 31.55 or 35. Okay, we can fix it later. And because weekly, so we choose this color, right? Yes. And yeah, 55. So give us another thing to take a look right there. Okay, so we have some copper from right here. So we have to, well, in order to remain, bullish, continue, this rally to continue, you have to close above this bearish breaker weekly right here. What week is that? It is in March 7 last year. March the 7th last year. So in order for this rally to continue, you have to close and break above this bearish breaker. But if fail to do that, then we have a good chance to short them right there. I mean, we can short them when it reach right here. Well, let's do a short right here. See, right. To bracket, and what you want to do, I want to sell, or you want to sell, right? Sell. Let's sell right here, right? That is our sell. So basically, if we go up here, we will sell them. So we put up here how many cents? 5 cents above this 71. So it's 76 right there. Yes, so 5 cents. So we reached about 20, less than 20 cents. $0.26. No, 16 cents. Yeah, only 16 cents. Less than 20 cents right there. We will reach that much, and then we will right here. It may retest this order block. Bullet abroad right there. So we reach 16 cents, around 20 cents, and we will have almost $1. So 1 to 5 ratio reward, and reward ratio right there. 1/5, 1/5. Reach 1 and get reward 5. So that let's see. Let's see if we move our entry. If we move our entry up here, you see if the stop loss and the target profit moving or not. No, it's not moving. Let's look at the monthly. Let's see monthly. I mean, for monthly is June, the statistics say only 48% up, so 52% gonna be down. So very interesting. That it up crazy. Yeah, if we trade, let's do that. But our exercise that we only trade once a week. So this is just a draft right here. We're not gonna check the trade because we already take a trade on Monday. So we have just follow our rule. Our rule is just one trade per week right now. That will help us, to regulate our emotion, FOMO, fear of missing out. So let's see. So for this week, we can say that Wednesday is the week low. So Wednesday low is the week low. So basically, the week low creating on Wednesday, and Thursday it start rolling. Exactly like the last time for a CPI release. I remember the week before, it making the low on Wednesday, and on Thursday it start rally. So it's happened the same. The same playbook is play out right now. It's amazing that we can lock that. We can learn that pattern, and next time we will trade, we just follow our rules. Sometimes we, let our emotion control us, so we take a very low quality trade, and then we mix on a very good high property trade and a very nice setup. So that's the important, that we need to have a rule. Or basically they say, have a plan our trade and trade our plan. Don't just go with the flow. Let's see how the price behaving right now. So what do we see? Man, that's amazing. So what time is it now? Now it's 9:56, so it's almost 30 minutes. The first 30 into the first hour of trading, right? And let's look at the hourly charts. So hourly chart right here. So it's our bullet breaker. Our bullet breaker. Let's see if any shift in the market structure or market structure change. So you see it's auto block, right? And then move away. I don't see any gap. Yes. But it is still a gap right here, gap up. So you can treat this a bullet breaker, right? And then you have a fair value gap on top of that. Then you can take a long and entry right here is the retest, right? Fair value gap. Let's see. Let's draw right here. Okay. So we can click it's a bullet breaker, and we see the fair value gap right here. So, and the retest. So this is the retest if we want to enter a long position. Then our target gonna be here. Okay. Right here you enter right here 30.92, then 71. So you reach 20 cents. And how much you gonna get from here? 31. Reach 20 cents, you get 40 cents. Yeah, 1 to 2, not bad. If we go here, you have another 20 cents, so 1 to 4. Risk to goal ratio if you're going to go long right there. That is the long, scenario. Let's say short. It's auto block, move away, retest that auto block, right? So we can enter here. Alright, let's see. What we want to see is we wanted to break this, break through this guy. Okay, right here is the bullet auto block, but if break through there, it will become a bearish breaker right there. So we want to go down, break through this. This will be our bearish breaker and retest the breaker, so we can enter a short position. Because we can see that a lot of inefficiencies right here, feather up right here, and not even few. Let's see. So it's jump in 10 time frame right now, because this is where we want to watch the any fair value gap within the time frame and give a very nice setup from 10 to 11 a.m. Let's see if can hit this, right? So it's play out as we anticipate. If we check a long position right here, right, it's the bullish breaker retest, and we see the fellow gap right there up, to after break through the bullish breaker. 31. So 10:30, we will know the high of the day or the low of the day. That's the DR model right there. By 10:30, we will know what is the high of the day, what is the low of the day. With 70% certainty or 70% of probability. So basically the first hour of trading, it's called opening range or defined range. We will know the high of the day and the low of the day. If we know it will be the high of the day, we can short them. And we know it's the long of the day, we anticipate it's the low of the day, and then we can go long. Right, let's go back to yesterday. Yesterday right here at 10:55, at 9:55, sorry. If we anticipate this is the low of the day, then we can entry right here or entry right here when the retest right there. Then we have a very nice trade, long setup right there. We anticipate right there because the DR model specifies that, on the first hour of trading, we will know the high of the day or low of the day. So in this case, it's a low of the day. So that's which way keep going up. And now go back to our right here. Oh, very, very interesting, my friend. Wow, let's see, it reached the target right there. Right, if we enter a long position here, we expect it's gonna hit that. Wow, 58 right there. Hit right there, hit the target beautifully. If we check the tree right there. Ooh. We don't want to enter the tree, okay. Because we already take the trade on Monday, so we just keep our rule, follow rule strictly. But actually you see it hit exactly, that's amazing. Look at that. It hit exactly 71. The point of interest that we are. Man, that's amazing. Look at that. If we don't take the trade, on Monday, then we'll go in this trade. Perfect right there. Perfect short. Look at that. It's amazing. Okay, just for the purpose exercise, let's say we take a short trade right there, that's our entry, and the stop loss 5 cents above. So see, it's gonna hit our target right here, which is this guy, the high of this candle. Remember the candle of the 930 is one of the very important candle, very critical point of entry that we pay close attention. See how price react to that. Man, see that? Exactly 71. That's beautiful. I think it start going down now. Man, exactly to the tick right there, my friend. Whew. Many good traders, right? We can enter right there. But the thing that we set our rule, we have to follow our rule. Our rule is 1 trade per week, that's it. Man, if I don't take the trade on Monday, I would love to enter it right there. I always put right there, but beautiful. Let's see it go down. Right, if you look closely right here is a very high reliable setup right there, right? Order block and then buy side liquidity taken, or the high time frame point of entry hit it, you got hit, and it move away right away. Right there. So in the bearish scenario right here, I wanted to break down this guy. It's a big candle right there. So it's a very, strong bullish breaker. I wanted to break this. If you want to go down further, you have to break this guy and then break this guy, this candle at 9:51. Okay. If you look at 5 minutes, it's also it sends you a very clear signal that it's gonna be short. You see, auto block, and then it hit the high time frame point of entry right there, and then move away from it right away. Let's say I want it to close below this bearish auto block, so we know that it start going down. Otherwise, it invalidate the bearish, scenario or thesis. Let's see. I mean, from the 1 minute, it looks like a very bearish right there. You see 1, 2, 3, 4, 5, 6 down close candle on the row. Let's see. And we see right here it's very critical right here. It needs to close below this guy. It's very so this one, what is the glow of this one? 31.17. Very interesting. Right there. So we want it close below that guy. So this candle 42, 942. Okay, let's assume that we took the trade right here. So let's see if how it's play out first. We're gonna get stop out or we're gonna hit our target. So let's see. Remember from the high time frame, this is a open of a bearish breaker. We want is to close above this guy in order to consider bullish. So basically it take out the liquidity, buy side liquidity from last August or August last year. So this is another buy side liquidity taken right here also. But we look at the smart money diversion, or in order to enter a short position right here, then we want to see this diversion, but we don't see anything right now. So it got very risky to enter a trade that counter trends, right? Counter trend trades is always risky. It have lower probability than go with the trend trade. So the trend right now is going up. In order for to short them, so on a retracement or reversal, we need a ship right here. Basically we need a bearish order block, right? And we want it to move quickly from that, create value gap, and revisit or retest the value gap or the order block. Then we can enter the trade here. Another scenario we want is to go break this bearish breaker, break it out, and then retest it at this level. Then we can enter our short right there. And our target gonna be what? Gonna be the open at 9:30, right? Or new week opening up. See, 9:30, over 9:30 right there. Or better is always gonna go up, but I don't see that's gonna happen. Wow. And what the time for that to happen? I think the better right now in the AM section, you're not gonna go any short. Wait for the PM section if you want to go short. Okay. If you want to go short, wait for the PM section. That's jamming right here, see. So it's about 18 cents above the buy side liquidity to see if it's over here 32. Here. But the same right here, right? We want to stay above this guy. Right here. So basically we want to stay above this. So if we saw earlier right here, look like a good trade, we will stop out. So that's why it's very important in trading that we set our rule and follow our rule, because we cannot control the price action, we cannot control the market, we cannot control the outcome. We only control the risk that we take. And the time is also important, right? Normally on a Friday or any other day, you see that the AM section is very strong, rally. Then don't try to jump in and short them right away. Wait for the PM section so you can short on a retracement or on a pullback right there. So if we enter the trade short right here, then that will be a premature for us. We stop out. We can do right here, short right here. We can short right here because break through this key level right here. Short right here and put our stop loss right here. 20 cents. It went aggressive right here. And we see the gap right now. We see the gap. We start see the gap right there. You see the fair value gap right there? I think this is a retest for a short. So we enter short right here. Exactly, and the short right here, my friend. 26. And where our target? Touch right here. Let's see. Yeah, and the short right here. And we have a gap right there. Short and the short. 27, right? 3 more minutes. We know the low of the day and the high of the day. Wow, that's very bullish right there. Ray is the bullish breaker. Retest them and then it continues to go up. Let's check it out, see what's the news. I mean, look at the news. We don't see any positive news. Oh, so what's the reason behind the rallies today then? Maybe a very good, CBI next week. I bought it to 32 something. If we are follow so-called tree try or tree push pattern, we can see that it may be exhausted the momentum. We see 1, 2, 3. 3 push, 3 try right there. Another bicycle really taken right there. Yeah, so now it's 10:30. So we know that the high of the day or lower of the day. Either it's gonna be the high of the day, then it go down, or the other right here will be the low of the day. And then if we never touch the low of the day again. If it's the low of the day right here, we never touch again. According to the DR model, which is about 7 to 80% accuracy or probability. From the analysis earlier, if we see that it's a fellow gap and need a retest, we enter short, then we will stop out. So why that trade is not a good trade? Yeah, in a small time frame you see that, but in a high time frame, it's not a setup. Okay. Wow, now you start see a big right there. I start see fair up right away. So at 10:30 around there. So we enter short position at 10:32. Wow, you see a heavy sell coming. Yeah, right here, exactly right here. That's the midpoint right there. The close. Yeah, 92. The close it. Alright, I think our time's up, so let's stop right here and talk to you later. Bye for now.